Value versus growth. Now, this is interesting because a lot of people talk about, well, what kind of investor are you? Are you a value investor? Are you a growth investor? Well, I'm sure my, value investors would say they're growth investors as well, except they're only willing to pay for an investment if it's what they think is a good price or cheap. Whereas a growth investor, perhaps they're willing to perhaps pay a bit of a premium to get or to chase or to go after some higher growth rates. So value investors may be called that, but I think they would tell you they're growth investors. They're no different than growth investors, except on the price points that they're willing to look at and the price they're willing to pay for individual investments. And interesting enough, when I first started my career in investing, I was a value investor. I was looking for rock bottom prices. I was looking for PE ratios on investments that were less than 10, so single digit PE ratios. And now looking back, it's kind of funny because very few investments today, very few stocks, very few companies have single digit PE ratios today. And if you're looking for deep value, and if that is one of the things you're looking at, low PEs, you're going to be in tough to find it. So many investors like myself and many others, I'm sure, have changed. And we've changed from deep value to more growth at a reasonable price, or GARP investing. And I've talked about this on our show before. GARP, GARP, growth at a reasonable price. We're willing to pay up for an investment if it is a reasonable price. And I think GARP investing is kind of the middle ground between the value and growth. We have a chart here which shows some differences between value and growth stocks. Here you have it. On the left side, value stocks, undervalued, priced lower than the broader market, low PE values, as I mentioned, relatively stable with low volatility. And that depends, obviously. Some value names have had some volatility the last few years, and that's been for reasons such as interest rate movements, etc. Dividends, they tend to, value investments at times can pay higher dividends. Growth stocks, overvalued, priced higher than the broader market. I don't know if the word overvalued is appropriate, but maybe they're trading at a bit of a premium. Maybe that's a better way to put it. High earnings growth potential, higher risk, more volatility because you're going after growth. These are names that can be more volatile, and a lot of these growthier names have very low dividend rates or no dividend rates at all. So really, growth versus value, tough to separate. But I think growth at a reasonable price, or GARP investing, is a good way to be, and the middle ground. I wanted to bring up one more chart here in this segment, and this is a chart of Berkshire Hathaway. And why do I throw that in there? Well, Warren Buffett, probably the greatest investor of our generation, always known as a value investor, long-term investor, right? He looks at things, he takes a long-term approach, and he considers himself one of the most famous and deep value investors around. And you can see how well Berkshire Hathaway has done over the last many years. I think this is roughly a 10-year chart, somewhere around there. Actually, more than that. Could be a 25-year chart. Overall, I think Mr. Buffett has changed his style a little bit. I don't know if I would call him as deep value as he used to be. Berkshire now owns Apple stock. Apple is a tech stock. Some people would say it's value, but it's still a tech stock. They've at one point owned IBM, as opposed to owning Coca-Cola, Wells Fargo, names like that. But Warren Buffett, Berkshire Hathaway's moved into tech stocks a little bit. So even the great Warren Buffett, the greatest value investor of our time, has changed a little bit the way they invest. And now perhaps Warren Buffett is more GARPy in nature than value. And the last thing I will say on Berkshire Hathaway is that they are now becoming the first $1 trillion market cap company that is not technology, if you can believe it. So a name to watch. Hopefully, Eli Lilly, the big pharmaceutical name that I talked about earlier in the show, hopefully they become the second $1 trillion company as well.